Welcome to The Explainer. So, overnight, the entire geopolitical landscape just shifted. A major U.S. military intervention in Venezuela has been confirmed. Today, we're going to cut through all the noise and really dig into what this means for the global markets and, what it means for your wallet.
Okay, before we dive in, we have to get something super important out of the way. What we're talking about today is just an analysis of the situation based on the info we have. It is absolutely not a recommendation to buy or sell anything. You should always make your own investment decisions based on your own personal situation. So this is what the world woke up to. These pretty stunning headlines. Operation Absolute Resolve, which is what they're calling it, was a massive U.S. military operation right in Caracas, and it ended with the capture of President Maduro. An event like this, it just sends immediate shockwaves through the entire global system.
And for anyone watching their portfolio, this brings up a huge question, right? When a war breaks out, what actually happens to the markets? The answer? Well, it's not nearly as straightforward as you might think. So let's take a look at what history and the data actually tell us.
In fact, how the market reacts to a major conflict is often completely counterintuitive. It's a phenomenon that financial experts have actually given a name to. They call it the war puzzle.
Okay, this is where it gets really fascinating. You'd think war would be universally bad for stocks, right? I mean, it makes sense. But the data, it tells a completely different story. Just look at the period before a conflict. The S&P 500 dropped over 12% before World War II even started. But once the war was underway, the market actually posted positive annual returns. And you see this pattern repeat itself over and over again.
So here's the key idea. Markets absolutely hate uncertainty more than they hate bad news. That period leading up to a war is just filled with ambiguity. No one knows what's going to happen. But once the conflict actually starts, that ambiguity gets replaced by what you might call a grim certainty. And that certainty, even if it's grim, allows investors to recalibrate and just move forward.
In this slide just breaks it down perfectly. Over on the left, you've got the pre-war jitters. That's the market pricing in all the worst-case scenarios. Then, on the right, you see the rebound. It's not that war is good news, it's that the unknown is gone. The market can now price in a known reality, and a lot of the time, that reality just isn't as bad as the fear that came before it.
All right, so how does this historical pattern apply to what's happening in Venezuela right now? Let's break down the three key sectors that are already on the move: defense, energy, and of course, finance.
First up, let's talk about defense. And the backdrop for, well, everything in this sector is this number, over $1 trillion. That is the proposed 2026 defense budget. It's a massive increase, and it provides a really powerful tailwind for the entire industry. But even with all that money flowing in, investors are being pretty selective. I mean, just look at the difference here between RTX Corporation and Boeing. RTX stock has absolutely soared, and that's driven by high demand for their combat-proven systems like the Stinger missile. Boeing, on the other hand, is kind of lagging, really hampered by a much heavier debt load, even though they have a solid defense backlog.
And it's not just about the huge giants. The broader aerospace sector is also in focus. You've got companies like Howmet Aerospace and GE Aerospace that are really well positioned to benefit as the U.S. looks to modernize its fleet and invest in these next-generation air and space dominance programs.
Now for energy. The entire story here really boils down to this one staggering number: 303 billion barrels of oil. That is how much Venezuela is sitting on. It is the largest proven reserve in the entire world. To put that in perspective, that's more than Saudi Arabia.
So this creates this fascinating split outlook for the energy market. In the short term, all this instability is probably going to add a risk premium, and that's going to push prices up. And that heavy sour crude is really important. It's this denser type of oil that a lot of complex U.S. refineries are specifically built to process into fuels like diesel. But long term, if a U.S.-led effort can rebuild that oil infrastructure, it could unleash a massive new supply source, which would actually put downward pressure on oil prices globally.
And the one company to really watch here is Chevron. Why? Because they're the last major U.S. oil company still operating in Venezuela. That means they're uniquely positioned to lead this massive, multi-billion-dollar effort needed to bring that decaying infrastructure back to life and get all that Venezuelan oil flowing back to the global market.
Okay, and finally, let's look at the financial sector. There's a very specific and pretty high-risk opportunity that's starting to emerge. We're talking about defaulted Venezuelan government bonds.
Now, for a very specific corner of the financial world, this is a huge deal. A new government could mean restructuring billions in bonds that have been basically worthless since 2017. This creates a high-risk, high-reward play for what are known as distressed debt investors. These are funds that specialize in buying up debt that everybody else considers junk, and they're betting on a massive turnaround.
So, with all of this volatility, all this uncertainty, how is an average person supposed to even think about their investments? Well, let's turn to some timeless strategies for navigating these kinds of turbulent markets.
So when you see crazy headlines like the ones coming out of Venezuela, how should you react? Well, financial planners would probably point to 3 timeless rules. First, don't let a single event derail your long-term goals. Second, make sure your portfolio is balanced enough to handle shocks like this. And third, and this is probably the most important one, avoid the impulse to react to the 24-hour news cycle. Panic selling when the market is down is one of the surest ways to lock in your losses.
Okay, so we've broken down the history, the sectors, and the strategy. What is the single biggest takeaway from all of this analysis? What should you remember? Well, history clearly shows us that markets are just remarkably resilient. They often adapt and find a way to grow, even in the middle of a global conflict. But that resilience also forces us to ask a really crucial question. Can we truly rely on past performance to predict the future in a world that's always changing and always unpredictable? If you found this financial breakdown valuable, make sure you subscribe for more explainers that cut through the noise on the biggest events shaping our world. Thanks for watching.